This is Robert Kiyosaki, the author of Rich Dad, Poor Dad, which has sold over 40 million copies worldwide. You probably know him as the outspoken financial educator who predicted the 2008 housing crash and has been warning about economic disasters for years. Now, aside from being a best-selling author, Kiyosaki has one thing in common with many successful investors. He doesn't just talk about financial threats, he prepares for them. In fact, there's a famous quote where Kiyosaki said, "The biggest risk a person can take is to do nothing." Sounds simple, right? But look at where most people are headed financially. So what does this tell us? No amount of conventional financial advice can protect you from what's coming in the economy. And you can only really safeguard your wealth one way. You have to understand the bigger economic picture. The warning signs Kiyosaki is pointing to can be confusing and overwhelming for most people, particularly those who only listen to mainstream financial news. And that's the very reason we made this video, to walk you through step by step what Kiyosaki believes is coming and how to prepare in 2025. By the end of this video, you'll understand why Kiyosaki believes what's coming is tougher than a market crash, what signals he's watching, and what you need to do to protect your wealth. We will dissect it all into simple steps that anyone can take. So if you're new to our channel, make sure to subscribe and hit the bell icon so you can always be up to date with our latest tips and insights. Now, before we tell you about Kiyosaki's specific warnings for 2025, the first thing you need to know is the most important concept, which is understanding the real problem. This isn't just about preparing for a typical market correction or recession. It's about the realization that the entire financial system is undergoing a fundamental transformation. And that's why we're starting with this, because it matters that much. Kiyosaki has been warning that what we're facing isn't just a crash. It's a systemic change that could wipe out the savings of millions. What does that mean? For instance, Kiyosaki points out that the US national debt has now surpassed $35 trillion. This isn't just a big number. It represents a complete disconnect from economic reality. The government continues to print money, creating what Kiyosaki calls fake money, the hidden danger that increases your risk, currency devaluation. Now, here's the thing. The markets, whether stock market, real estate, or bonds, will always fluctuate. That's just how it works. But when you understand that the underlying currency itself is at risk, you realize that traditional, safe investments might not be safe at all. Savers are losers, Kiyosaki has repeatedly warned. When you hold cash during times of currency devaluation, you're essentially watching your purchasing power evaporate. And don't feel like this is only affecting the wealthy. Even if you only have a small amount in savings, the important part is that you understand what's happening. Your standard retirement advice about 401ks and IRAs might be leading you straight into financial disaster. And so as we try to grasp this concept going further on into this video, always remember that understanding the real problem is the first step to protecting yourself. It's not about waiting for the market to recover or hoping things return to normal. Your most powerful ally when it comes to preserving wealth is knowledge. Well, now that we've gone over about understanding the real problem, the next step is recognizing the warning signs. This part can seem a bit overwhelming to process, especially if you're not used to looking beyond mainstream financial news. But no sweat, will help you break it down so it all makes sense. Kiyosaki has highlighted several key indicators that suggest we're heading for something much worse than a typical market crash. First, he points to the inverted yield curve, which has historically been a reliable recession predictor. But this time, Kiyosaki believes it's signaling something more severe. There's nothing wrong with a normal business cycle of boom and bust. As Kiyosaki puts it, the boom-bust cycle is controlled by the Federal Reserve System, but what we're seeing now goes beyond that. To recognize the true warning signs, examine the banking system closely. Once you have seen the failures of banks like Silicon Valley Bank and the ongoing issues in the commercial real estate market, wait to see what comes next. If you're noticing more bank failures, don't worry about the stock market's daily fluctuations. Start looking at the broader financial system. The velocity of money, how quickly cash circulates through the economy, has been declining, which can indicate severe economic contraction ahead. One technique that might help you spot these warning signs is watching what Kiyosaki calls the 4Gs. Gold, silver, which doesn't start with G but is grouped here, gas, oil, and groceries, agriculture. These commodity prices can tell you more about the real state of the economy than stock indices. Okay, we've got understanding the real problem over the talking points, and we've covered recognizing the warning signs. So the next step is building a crisis-proof portfolio. Consider this your first real step to protecting your wealth. A crisis-proof portfolio is where your money will have the best chance of surviving what Kiyosaki believes is coming. It's time to discuss how to structure your investments and what different assets you should consider, so you can decide which is the right fit for your protection. The first thing you'll need to do is reconsider traditional paper assets. Paper assets include stocks, bonds, mutual funds, and even cash itself. While these have been the foundation of conventional investing wisdom, Kiyosaki warns they could be the most vulnerable in the coming crisis. It's simple to understand why if you consider that these assets are all denominated in fiat currency, which governments can devalue through inflation. You will have to enter a different mindset about what constitutes safe investments, and once it's established, you're ready to invest differently. The beauty of Kiyosaki's approach is that it's focused on tangible assets. They don't rely on promises from governments or financial institutions, which makes them a great go-to for protection. But tangible assets aren't the sole option. Your protection strategy may prompt you to look at other types of investments. Precious metals, for example. If wealth preservation is your goal, gold and silver come with historical protection benefits. Both have served as money for thousands of years and tend to maintain their purchasing power during currency crises. Real estate, by contrast, can provide both cash flow and appreciation, especially if you follow Kiyosaki's advice to focus on properties that generate positive cash flow. Delayed gratification for long-term security, those are great options. Next, we have income-producing businesses. For example, if you're worried about job security in a major economic downturn, having your own business gives you more control over your income stream. Then there are commodities beyond precious metals. If you're concerned about inflation, commodities like agricultural products, energy, and water rights can appreciate as the cost of living rises. Because of their essential nature, people always need food, energy, and water. These investments can be powerful tools. There are pros and cons to each type of asset, so it's important you find the right mix for your situation. If you're unsure where to begin, precious metals are a great choice for many investors due to their historical reliability during crises. From there, you can branch out into other tangible assets as your understanding increases, whether that's income-producing real estate or essential commodities. A key tip is to seek assets that will retain their value regardless of what happens to the dollar. The point is to have your wealth stored in forms that can't be easily devalued by government policies or banking failures. So do that. Take that first step and build a portfolio that will protect you from what Kiyosaki sees coming. Now that you've understood how to build a crisis-proof portfolio, the next step is developing financial intelligence. The trick is not just owning the right assets, but truly understanding how money and the economy work. Let's say you've bought gold and silver as Kiyosaki suggests. If that's all you do without understanding why these metals have value during a crisis, you're still vulnerable. For long-term financial survival, financial intelligence makes a good foundation because it allows you to adapt as conditions change. It can be difficult and time-consuming to develop financial intelligence on your own. Unless you're truly keen on studying economics, monetary history, and financial systems, a simpler and usually more sensible option is learning from mentors and educators like Kiyosaki. They expose you to a broader range of ideas at lower cost with less struggle. It's a little like having a guide through treacherous territory instead of trying to navigate alone. But if your target goal is something more immediate, like protecting your current savings or preparing for the next 12 months, you'll want to focus on specific knowledge. Financial intelligence, after all, can take years to fully develop. Instead, try learning about specific assets like precious metals, focus on one area of real estate investing, or master a particular business model. They won't give you the complete picture, but they'll provide immediate practical value when you need it most. The key is to align your learning with your timeline. Imagine it is similar to preparing for a storm. If you have advance warning of a hurricane, you might as well learn about building proper shelters and creating long-term supplies. But if the storm is already on the horizon, you want the fastest, most practical preparations possible. The same goes for your financial intelligence. Your education should match the urgency of the situation. And keep in mind, no magic formula exists. Your approach to learning is absolutely something that can change after your circumstances and the economic environment change. Okay, now that you've understood the importance of financial intelligence and you're pumped to protect yourself, the next thing to talk about is the other half of this equation. Taking strategic action now. Risk management and wealth preservation is achieved best by taking decisive action before the crisis hits. Developing a sound protection strategy is not a matter of making a few investments and hoping for the best. It's about systematically positioning yourself to weather the economic storm Kiyosaki sees coming. In other words, you wouldn't wait until the hurricane makes landfall to prepare, would you? The rule applies to financial protection too. For instance, if you only start moving your assets when banks are already failing and markets are crashing, then you're reacting too late. Instead, you can counter it by taking action now, when there's still time to position yourself strategically. The idea is to make moves before everyone else recognizes the danger. If one portion of the financial system suffers a hit, you want to be already safely positioned elsewhere. This strategy minimizes your risk and makes sure you're not caught unprepared when what Kiyosaki warns about finally arrives. Finally, the last important thing you need to know is to keep an eye on certain things. First, watch out for counterparty risk. Every financial relationship you have represents potential vulnerability in a crisis. Start with the decision of figuring out which of your assets truly belong to you first, and then how to secure them properly. For a beginner example, you might consider physical gold and silver in your possession, real estate owned free and clear, and essential supplies. Secondly, keep an eye on government actions. Monetary policy and fiscal decisions are so important, but it doesn't mean you should panic with every headline. Visit reliable alternative news sources periodically to find out what's happening beyond mainstream reporting. If a certain piece of legislation is being pushed through quickly, do you want to understand how it might affect your assets? If something's not making sense in the official narrative, don't be afraid to dig deeper. It's a matter of finding reliable information. Lastly, do not make the rookie beginner mistakes. Avoid waiting too long or being paralyzed by fear of making the wrong move. Protecting yourself is a balanced approach, a thoughtful strategy, not panic buying random assets. Market timing is risky. You can't anticipate exactly when the system will reach its breaking point. Concentrate instead on consistent improvement of your position, as that can help you be ready regardless of when the crisis actually hits. And fear or procrastination shouldn't prevent you from taking action. The earlier you position yourself, the more likely you are to preserve your wealth. Or, as Kiyosaki so wisely noted, in today's uncertain world, the best thing you can do is be prepared for the worst. Learn, apply, and execute the plan. Creating a crisis-proof strategy requires some effort, but it's one of the best things you can do to prepare for what's coming. And that's everything you need to know about preparing for what Kiyosaki warns is coming in 2025. Keep in mind that financial protection is a process, not an event. Stay vigilant, at your own pace. Adapt as conditions change. The decisions you make today will determine your financial future, so don't let fear or uncertainty slow you down. The best time to prepare was years ago, and the second best time to prepare is now. If you found this video helpful, make sure to give it a thumbs up and share it with anyone else who might benefit from these warnings. And if you're new to our channel, don't forget to hit that subscribe button and turn on the bell icon so you'll never miss out on valuable insights and practical advice like this. Thank you for watching, have a great day, and we'll see you in the next video.